Welcome to TradeTheMBI.com. This is John's reports for the 2nd of March, and well, we're getting a continuation here of more of the softness. We've had just a fallout of midterm buyers. Long-term buyers were holding up, but short-term buyers as well had peaked out, and it just started to cascade further. We're in that continuation zone with the orange stuck between cyan and red as well. So that clear signal was that crossover of steel dipping below, and that took place, well, it was a couple of days ago. And it's just been a continuation of the weakness from this signal right here with that steel dipping below the cyan and already with the green below. And we're not oversold, which means it's not necessarily done. Because if that were the case, we'd be below the negative 60, which means there would be, some semblance of ending of the selling. Not particularly the case at this particular moment. Range-wise, we're right back within this, initial turnaround phase that started. And even with the reset that took place right there, anything below these ABMs was just going to be a run situation. What we've enjoyed, though, is the intraday readings, because even within this lower shakeout that started with that same steel crossover signal, we're just getting a continuation of that lower shakeout maneuver. And some of it, of course, the news was all about the tariff situation. There's that, but there's also some, confluence of other economic signals that are difficult to weigh. Will interest rates be raised as fast as they're talking about? If so, how soon, by how much? And plus, you've had a pretty significant market run-up. What this is going to end up looking like will be this A, B, and then back up C situation once you get to an oversold. Not there yet. And who knows, this may even go down a little bit further as a retrace. We'll keep an eye on it, though. I would, again, this is one of those correlation expectations where you compare where the NASDAQ is in relation to the S&P, and we'll start to see some of that balance out. That's caused a bounce back in euro. That should help stem things because, again, that rising euro helps from an earnings standpoint. That doesn't mean things aren't a bit over the top, but again, you've got to take into account if you're pre-valuing inflation going forward, the market has priced some of that in. If it's not going to be realized as far as inflation, then you have a reduction in those estimations, and that's going to cause some people to say, hey, valuation-wise, I want to be out, wait for later. And we're dealing with that month end going into the beginning, where I mentioned we're not going to see the new fund flows until the beginning of the week. So some people aren't going to have, well, at least the important players aren't going to have the significant monies that they need to jump in a big way if they want to. And we're not convinced completely, given those readings, that that's exactly what they're planning to do, but it looks like you'll get a reset. It's just a question of how many more days it takes before it does. Of course, flight to quality back into treasuries and oil. Again, even with the massive increase, you're seeing record production levels. I think that it was the first time since the 70s, U.S. production way over the top. So the fact that we're producing it and using it, inventory draws and excess are going to be a little bit less important going forward. I know they still react to the news on some of these things, but the reality is when you're producing that much and still having a significant amount of it used, means you have a growing dynamic. It'll be interesting too, because then if you have the tariff situation on steel and aluminum, that is going to improve manufacturing, at least at home. The broader concern is that it will spark a trade war. Remains to be seen, but I can see the fear that it generates. These so-called globalists don't really care about where the jobs are. They just want to see money being made, and they're not really sensitive to whether they're Americans making the money or foreigners. So that's sort of the deviation between Wall Street. They're just about the money, they're not about the human dynamic of it. And gold just stabilizing right off that bottom. Still not done yet, though, because it's well oversold. You don't have a reset of anything, so maybe you get a little bit of a pop back to it, but probably won't be too significant. So we go to the 5K. Look at how far I had to shrink it, because that was a massive amount of activity going on. So we had the broader short that took place there. It kind of pumped in and out in between. Then we had this nice little rally run that was good, but it produced a short and came across again with, and while these moves look small, some of these are 15, 20 point moves, so they're still significant size-wise to be able to play. And then we just started cascading lower, and I was talking about just utilizing 38% line as a stop as we were starting to fade down, and then we started to see shakeout improvement on or right about here, and that kind of consolidated for a little bit and produced a very nice buy setup that took us right back up to the peaks. And then we started fluctuating with short signals and DOC spreads all along through here that were signaling that this wasn't going to survive. And you had a series of them. They were making lower spike moves, which means there wasn't as much interesting. So it was sort of an accumulation phase to a broader DOC short setup, which was right here when that steel dipped below and the shakeout moved into a negative space right there, dipped below the ABM yellow at the 79 range, and then we've begun this most recent cascade well below. So we're now taking out the lows right back down here from earlier in the midday before the mini rally, and looks like we're going to see some more weakness from this because we still don't have, this is the only time we had a reset of steel in that, and it wasn't even complete because it didn't dip all the way down to the negative 13.5. It still produced a decent pop-up off of it. The only advantage you had in this at all was the cyan moving below red during the short up spark that took place right here. And it was a pretty decent move because depending on where you were looking at it, because for me I was looking at the break of the 23% on these particular moves. In this particular case, the close up even at 71, price shot all the way up to 81 was a good 10-point move, and that's from above the 50%. Anywhere lower, and you were at significantly bigger number return. So it's just a question of what the overall bias is. And for me, I don't have an objection in this particular market right now to go long and or short based on the readings. I just recognize that when I'm in a down move and I want to stay with a trend move on that, utilizing that moves above the 38% didn't really create any issues until we got down here, and that was just coming off of the low section, and right at the same time I was getting general buy signal, which produced that overall up run, depending on where you wanted to jump in along the way. And some people ask, why have several signals? Well, because it's not all the time that I will move 100% into any one position, even when it comes to the NBI opuses. Always expect to do multiple entries, at least two. And in this case, particularly if you're getting large numbers, you've got to acquire a little bit at a time. You don't want to be getting in too much too quickly. It's not a factor, I know, if you're only trading a couple contracts or even just one. But needless to say, even for the start of the month, we've had more than enough moves just in the last 2 days to be significant winners for just following what the signals are, not overreacting to news and everything like that. That sometimes is what gets people in the way, and or the idea that, oh, you're down 15, you're not going to go down 20, or you're down 20 and then you're not going to go down 40. I get that a lot, where people will tell me, oh, well, the market was up 15, I didn't want to jump in, and then you see the market up 40, and then it's like, okay, a short starts, the market was already down 15 before I was really ready to short it again, and it's like, okay, and then the market ends up down 40. So you see, the point is that if you tune out what the amount of the price move on any given, you're down 22 right now, has nothing to do with what the readings are. And if the readings indicate that you're going to move further, then you got to go with what is, as opposed to perceiving what is too much, too far, or too little. Because particularly when we're early in on moves, you get very big, dramatic setups, and then by the time everybody else gets into it, they're getting into it when we're going to want to unload and stuff, and that becomes the liquidity for getting out, and why you end up at those sharp rises, and then they stagnate as the new buyers and everyone are jumping in. And if they're not enough, then if they're getting sold into, you get this fallback position, and that's just about where we're at. So that's the long and the short of it for now. I'll always keep putting up the charts on the Skype chat and pointing out unique situations with readings so that makes it easy to grasp it as I continue to make some of those changes behind the scenes that just pop up as your indicators or paint bars even show up just a little different, and you may not notice it at first, but being as effective as they can be is the most important aspect. As always, trade well. We'll talk again later.